Oh my God, Bitcoin just crashed over $200 in the past couple of days. What do we do? Who could have possibly saw this coming? Okay, guys, in this episode, we're going to be talking about what Bitcoin recently did and if you should or shouldn't be freaking out. All right, so if you've been paying attention to Bitcoin's price over the past few weeks, you know that A, it was the best performing currency of 2015 and 2016, and we recently just had a big bull run from $800 up over $1,100 in less than 2 weeks, okay? So it gained over 30% in less than 2 weeks, and then over the past 2 days, we dropped a little over $200, roughly about 20 or 25%, back down around the 800 to 900 level. So here's what happens. Every time Bitcoin's price goes up really fast, I get flooded with emails and tweets and calls from people asking questions like, Chris, should I buy Bitcoin? Is it too late to buy Bitcoin? Where should I sell Bitcoin? You know, there's a handful of questions that it's just the same questions over and over again. And then when Bitcoin crashes, oh my God, Chris, Bitcoin crashed. Should we sell? Is it going to keep going up? What's going to happen? Let me just say this in all seriousness. If you find yourself asking those questions about any market, I don't care if you're investing in real estate, gold, Bitcoin, the stock market, whatever. If you find yourself asking questions, what should I do after a big event happens? It's already too late, right? This is why trading and investing is like being a chess player. You have to think 2 or 3 steps ahead of your opponent. You have to anticipate what's coming next. The mass majority of people, and this is why I absolutely despise CNBC and these money shows on TV that talk about what's already happened. Like when Bitcoin is quiet and the price is low, nobody wants to talk about Bitcoin. But when price has doubled, tripled, or quadrupled in price, all of a sudden, that's when the mass public becomes interested in Bitcoin. And that's why everybody inherently knows buy low, sell high. But why the hell does everybody keep doing the exact opposite? Buying high after the big moves happen and then selling low when a panic happens, right? That's just what happens. And I want to show you a video from a guy that is a gold bug. He believes heavily in gold, and I don't know if it's a conflict of interest or not, but he sells gold. I just want to show you this clip.
We were going to do an episode for Hidden Secrets of Money, and probably still are, on Bitcoin. We went to a conference, learned a lot about it, filmed a lot of interviews, and then Bitcoin took a huge plunge and everybody lost interest. So other episodes of Hidden Secrets of Money took precedent to that.
This is the mentality of your average investor, right? As you heard him say, when Bitcoin's price crashed, nobody had interest in it, so I'm not going to do videos about it, right? I was very, very bullish long-term on Bitcoin when Bitcoin was around the $200 mark, all the way up through the 3, 6, 7, and it seems like only recently when Bitcoin got above 800 did the mass public and CNBC and all these pundits and talking heads come out of the woodwork actually talking about Bitcoin. And you have opinions on both sides of the coin, right? You have some people that are like, they say crazy shit like Bitcoin doesn't have any value, it's not money, right? It's the same old stuff that we've heard for years and years and years. And then you have people that are like, hey, Bitcoin's back, now it's time to buy, right? Well, let me walk you through the 7 steps in a cycle, in a market cycle, and show you on the chart what happens and why these things happen and how it's so predictable. I mean, I've seen this boom bust pattern happen over a half a dozen times now in Bitcoin, and I don't see it changing anytime soon. Let's jump into the charts. Okay, so if we're just analyzing what's happened over the past few weeks, you can see that this was major resistance in Bitcoin, right? Right around the 775 to 800 level. And then the last half of December of 2016, we got a big breakout, right? We went from 800 to over 1100 very quickly. And here's what happens. Step 1 is you have a massive bull run. That's what happened here, 800 to 1100. Step Two, that attracts media attention. And if you go back and you do a Google search for news events with the keyword Bitcoin over the past month, you'll see an influx in search volume and an influx in news reports about Bitcoin during this time. Step three, this attracts investor and trader attention, right? And that's why once you get the initial breakout, you typically get 2 or 3 follow-on breakouts, right? And then that's when I start to get the emails and the flood of questions of, should I buy? Is it too late? What, where do I sell, right? And it's people that don't have a plan, that are just out of the game or lazy, and then they hear on TV some pundit or talking head saying how great Bitcoin is. Oh, maybe we should buy. And then guess what? They end up buying on the parabolic blow-off move where it's likely to reverse, right? So step 4, after the late investors pile in, you have a parabolic move, which everybody gets extremely euphoric. Bitcoin's going to 5,000. Then you start to see these insane predictions, right? Bitcoin 5,000, Bitcoin 10,000. I've seen Bitcoin 1 million, right? And that's when people just get blinded by this stuff and they just start buying like crazy at the highs. Step number 5 is when buyers dry up. Right? This is what we call the greater fool theory. How high is high? When is it too late to buy? When is it too high to buy? Well, you never really know for sure, but I want you to think about the greater fool theory. The greater fool theory is this: as long as there is another greater fool to buy at a higher price than you, you're fine. But you don't want to be caught being the greater fool buying at the high, right? Now, step number 6 is after you have all the buyers that have dried up, after everybody's piled in, after the media's gone nuts for it, after all the late investors and the people that, just don't pay attention on a daily basis pile in, what happens? Well, when there's no more buyers, the market can't keep going up. It's like a rocket ship taking off, right? And you have all this fuel fueling this rocket ship, and then once it runs out of fuel, what happens? And then it comes crashing back down quicker than when it went up. And I always like to say the market takes the stairs up and the elevator down, or in Bitcoin's case, it likes to base jump off of the cliff and crash extremely fast, right? It's such a speculative market. There's so much emotional, or what I call dumb money, in a market. So that's why it took 2 weeks to make these gains and just 2 days to give back a large portion of it, right? So what happens after the flash crash or the fast crash or whatever you want to call it? Then the 7th step happens where Bitcoin's price stabilizes. Rational investors understand what happened. They look at the emotional cycle. They look at the news. They get a feel for it and they say, oh, this is just another one of Bitcoin's pump and dump or boom and bust patterns, right? And a lot of people that aren't in the investing community hear that phrase, pump and dump or boom and bust, and it's scary to them. Rightfully so, because there have been so many penny stock scams and so many markets that, like the tulip thing, right? A lot of people, the word bubble is like such a buzzword now. After the 2008 financial crisis, everybody's afraid of bubbles. And that's why everybody missed out on the massive stock market bull run over the past half a dozen years, right? Because everybody was always looking for the next bubble. When's the market going to implode? When's the market going to implode? Meanwhile, the market doesn't care about you. It just keeps on tracking higher, right? Let's take a look at the charts. You can see over the past couple of years, this has happened 3 major times, okay? So this is back in the early part of 2015, and this is where I was really interested in accumulating around the 200 mark, but look what happened here. All right, Bitcoin, if you increase the scaling, this is a massive percentage gain. It came from about $250 to $500, so it literally doubled in the span of a couple of weeks, right? Not sustainable. Again, think rocket ship crashing down. What happened? You got step 1, you have the initial breakout. Step 2, you attract media attention. Step 3, investors are late to the game buying in the 400 or 500 mark because they're like, yo, I don't want to miss out. Bitcoin's going to 1 million. I just saw some guy make a prediction. It's going to 10,000 and then 1 million. I have to get in this, right? And then there's no greater fools. The buying dries up and boom, crashes back down, right? So that's step 5 and 6. You get the crash. Step 7, the market stabilizes and keeps on trucking higher while everybody else forgot about it. That's what trends are made of. Is trends do the best they can to leave everybody out, right? It's when everybody's piled in that things go crazy and crash. But it's when you get those slow trends, those grinds, that's where you can ride the back of a big market. Here, again, summer of 2016, we had a breakout from 450. Again, almost a double, right? Went from the 4s almost to 800. And then here we actually had some technical issues, right? We had the Dow hack, we had Bitfinex, the biggest exchange, having a ton of issues, crash back down. But look where it came to, 475, prior breakout level, stabilized, right? So Bitcoin's not dead. All these obituaries calling Bitcoin a failed experiment and how it's not real money and all that. You get every time there's a crash, you get all this negative press, right? And every time there's a bull run, you get all this positive press. So if you want to make money in Bitcoin, on a very simple level, just look at what the press is saying. Look at what the talking heads and the pundits and the wannabe economists on TV are talking about and do the exact opposite. It's crazy. This has been happening ever since Bitcoin's inception, right? We had a bubble in 2011. We had 2 bubbles in 2013. We had the massive China-driven bubble in the end of 2013. And now 2016 and going into 2017, we're seeing the same stuff. It's so predictable, guys. So look, here we are again, later part of 2016, have the breakout and then the crash. So why did this happen? Okay, I talked about what investors do and what the reality is about how trends and market cycles develop, right? Again, everybody ignores it at first. It breaks out. It attracts media attention. People late to the game buy. Buyers dry up. It crashes, stabilizes, and keeps on trucking. Now, every time this happens, though, people always look for a reason why. Why did this happen? What caused Bitcoin to crash? Nobody likes to think and understand that people are emotional, irrational beings that cause this. So then you start to see news articles like this, through rally or crash, here's why Bitcoin buyers are nervous about China. And look, I'm not discounting this article. There are some valid points in here. A massive percentage of trading volume comes from China, and it's because of capital controls. And I think this year, one of my predictions is that we're going to see a massive increase in volume coming out of places like India. Again, they have over 1 billion more people than the US, and their government is doing some crazy stuff like making 85% of their cash money illegal, making people wash it, then taxing the hell out of them, setting limits on how much gold people can own. When governments start doing this kind of insane stuff, it drives people to look for other alternatives, right? So I am bullish on Bitcoin long term, but I look and make a clear distinction between trading and investing, okay? So if you're like, Chris, okay, great, I'm watching this video, I get it, what do I do? You need to have a look in the mirror and say, look, there's 2 things that I need to look at with my own investing or trading. Investing is buy low, sell high, hold for the long term, right? The reality is Bitcoin is very expensive right now. Could Bitcoin crash to 200 tomorrow? Absolutely. Is it likely? No, right? So whenever Bitcoin is highly volatile like this is when I think it's a good time to be a trader. Take advantage of the volatility, right? Catch the crashes, catch the bounce plays. You can play the volatility and be long and short while at the same time you're a long-term investor, right? Obviously, in hindsight, buying at 200 is much more attractive as an investment than buying at 1,000, right? But the reality is that nobody wanted to buy back here. Everybody thought I was crazy. And now, not everybody. Again, there's a pretty healthy community of people that really understand what Bitcoin is and what the long-term implications are. And again, I think that currency competition is the biggest benefit for capitalism and that is going to help pull people out of poverty, right? Like, I think so many people are underestimating what's actually happening in the cryptocurrency space right now. Like, everybody, like, I can't stand it whenever I hear somebody say, like, oh, Bitcoin's just a speculative thing and it's not a real investment. That's bullshit, because if you say that, you don't understand what it's actually doing and how it's affecting people's lives on a day-to-day basis. Like when I went to Venezuela and talked to the waitress who is sending money home to her mom, who is literally dying trying to get medical care, and because of cross-border remittances and the fees and hyperinflation, she's losing most of the money that she's working so hard to get, right? This is where Bitcoin solves massive problems more than just speculating, right? So, sorry, I went off on a little tangent there. I want to get to the point, which is this. When it comes to thinking about and being an investor, what sounds simple and what sounds obvious is often the most difficult thing to do. And what's scary in the markets, which is volatility and panics and crashes and parabolic moves, that's where the opportunity is as a trader, right? So just think about those two things. And next week, I actually just recently surveyed everybody in our trading room, and I said, guys, what's the biggest problem that you guys are having? And it stemmed from a lot of mental issues, emotional issues, fear, greed, hesitation, overconfidence. So next week, I'm actually going to be doing a live masterclass talking about all of the different mental problems that you could potentially have as an investor, as an entrepreneur, as a trader, and how to get your mindset right. So this is 100% content. There's no pitch. I just want to help people understand the right way to look at the markets, to look at their business, and to look at investing. Because as humans, what's ingrained in us is to move away from fear, move away from risk, move towards safety, right? Where in investing, you have to do the opposite. You have to get comfortable with fear. You have to get comfortable with losses. You have to leave your ego aside and know when you're wrong and cut losses short. So that's what we're going to be talking about. I'm going to link it below. If you're watching this on YouTube or on Facebook or on my blog, just click it, register. Again, 100% content. I just want to help you guys really understand the right way to develop your mindset as an investor. So I hope this video is helpful. I know it ran a little bit long, but I think this is just such an important point. And if you have any questions, leave them below. Otherwise, I'll see you in the next video. Take care, guys.